Welcome back, my YouTube family. There is a Social Security form that has been available for years, a real official SSA form that can add anywhere from $80 to over $400 back to your monthly check. It is not a new program, it is not a special application, it is a one-page form that takes about 15 minutes to fill out, and the overwhelming majority of people who qualify for it have never heard of it, never filed it, and are losing that money every single month right now. The form is called the SSA-44, and today I am going to walk you through exactly what it is, who qualifies, what you need to gather before you file, and how to make sure your request is approved the first time so you stop overpaying and start getting what you are actually entitled to. If you or someone you love is on Medicare and Social Security at the same time, stay with me, because this video could be worth thousands of dollars to you over the next few years. Before I get into the form itself, if you are watching this and you are not subscribed yet, please hit subscribe and turn on the bell notification right now. Here is the honest reason why. The SSA and Medicare operate on rules that most people only find out about after the damage is already done, after the wrong deduction has been taken for a full year, after the deadline passed, after the appeal window closed. What I do on this channel is find those rules before that happens and explain them in plain English so you can act while you still have time. That is the only thing this channel does. Subscribe, turn on the bell, and let us get into this form. What is IRMAA and why it is reducing your check right now? The silent deduction most seniors on Medicare never question. To understand the SSA-44, you first need to understand what IRMAA is, because the SSA-44 is the form you file to fight it. IRMAA stands for Income-Related Monthly Adjustment Amount. It is an extra charge added to your Medicare Part B and Part D premiums, deducted directly from your Social Security check every month if your income was above a certain threshold 2 years ago. Here is the standard Medicare Part B premium in 2026, $174.70 per month. That's what most people pay. But if your income in 2023, 2 years ago, was above $106,000 as an individual or above $212,000 as a married couple filing jointly, Medicare charges you more, significantly more. The extra charges by income bracket look like this. If your 2023 income was between $106,000 and $133,000 as an individual, you pay an extra $68.90 per month on top of your standard premium. If your income was between $133,000 and $167,000, the surcharge jumps to $172.20 extra per month. At the highest income levels, above $500,000, the surcharge reaches $419.30 per month per person. Now, here is where the problem starts. The SSA calculates your IRMAA based on your tax return from 2 years ago. That is the most recent data they have when they set your premium each January. But what happens if your income dropped significantly since then? What if you retired? What if you sold a property and had a large one-time gain that year, but your income is now much lower? What if your spouse passed away and your filing status changed? In all of those situations, the SSA does not automatically know your income changed. They keep charging you based on the old number. And that is exactly what the SSA-44 is for. The 7 life events that make you eligible, most people do not realize theirs qualifies. The SSA-44 is an appeal form. You are telling the SSA, my income has changed due to a specific life event, and I am asking you to use my current or more recent income instead of the 2-year-old tax data you are currently using. The SSA accepts this appeal only when the income change was caused by one of these qualifying life-changing events. Listen to this list carefully because many people have experienced one of these without realizing it qualifies them. Number 1, marriage. If you got married and your household income changed as a result, that qualifies. Number 2, divorce or annulment. If your marital status changed and your income dropped, that qualifies. Number 3, death of a spouse. If your spouse passed away and your income is now lower because you are no longer filing jointly, that absolutely qualifies. And this is one of the most common situations where seniors are being overcharged right now. Number 4, you or your spouse stopped working or reduced work hours. If you retired, went part-time, or left a job since that tax year, that qualifies. Number 5, loss of income-producing property. If you lost rental income, if a property was destroyed, if you had to sell at a loss, that qualifies. Number 6, loss of pension income. If a pension was reduced or stopped due to a company bankruptcy or plan termination, that qualifies. Number 7, employer settlement payment. If you received a settlement from an employer and that inflated your income in the base year, that qualifies. If any one of those events applies to your situation, even if it happened a year or two ago, you may still be eligible to file the SSA-44 and have your IRMAA surcharge reduced or eliminated going forward. Every month you wait is money you are not getting back. Stay with me, because the next section is the part most people get wrong when they file this form, and one small mistake can get your request denied even when you fully qualify. How to fill out and file the SSA-44 correctly. Step by step, what to gather, what to write, and how to submit so your request is not rejected. Let's go through the filing process step by step. Step 1. Download the form. Go to ssa.gov and search for SSA-44. The full name of the form is Medicare Income-Related Monthly Adjustment Amount Life-Changing Event. Download the PDF, print it, and fill it out by hand. You can also pick it up at any local Social Security office. Step 2. Gather your documentation. This is the step where most people make mistakes. The SSA will not take your word for it. You need to provide evidence of two things. First, evidence of the life-changing event itself, a marriage certificate, a death certificate, a letter from your former employer confirming your retirement date, or a divorce decree. Second, evidence of your current or more recent income, either your most recent tax return if it reflects the lower income, or if your income dropped this year and you do not have a return yet, you can provide a letter from your employer, a pension statement, or your own written estimate of your current year income with supporting documentation. Step 3. Fill in the form completely. The form asks for your Medicare Beneficiary Identifier Number. That is the number on your red, white, and blue Medicare card. It asks for the type of life-changing event. It asks for the tax year you want them to use instead of the current base year. And it asks for your modified adjusted gross income for that year. Step 4. Submit the form. You have 3 options. You can mail it to your local SSA office with your supporting documents. You can bring it in person to any SSA office. Walk-ins are accepted. Or you can call SSA at 1-800-772-1231 and ask to initiate the RMAA appeal by phone, though submitting the written form with documentation is faster and creates a paper trail. Step 5. Follow up. Once submitted, SSA typically processes RMAA appeals within 30 to 60 days. If approved, your reduced premium takes effect the month after the decision. If denied, you have the right to appeal the denial. That process is called a reconsideration request, and it is free. One important point. The SSA-44 adjusts your premium going forward. It does not automatically refund what you already overpaid in previous months. However, if your appeal is approved and SSA determines you were overcharged, they will sometimes issue a retroactive credit applied to future months. Always ask about retroactive adjustment when your appeal is approved. how much money this can actually put back in your check. Real numbers, what a successful SSA-44 appeal is worth in dollars per month. Let me give you some real numbers so you understand what is actually at stake here. The standard Medicare Part B premium in 2026 is $174.70. If you are currently in the first IRMAA bracket, income between $106,000 and $133,000, you are paying an extra $68.90 per month. A successful SSA-44 appeal that drops you back to the standard premium saves you $68.90 every single month. Over 12 months, that is $826.80 back in your pocket per year. If you are in the second IRMAA bracket, your surcharge is $172.20 per month. Removing that saves you $2,066.40 per year. If you are in the third bracket, your surcharge is $275.50 per month, over $3,300 per year. And if you also have Part D IRMAA, the extra charge on your drug plan, that compounds on top of the Part B surcharge. Many people are paying IRMAA on both Part B and Part D simultaneously and do not know it. The SSA-44 covers both. Now, $300 per month is not a guarantee. The exact amount depends on which IRMAA bracket you are currently in and which bracket you drop to after the appeal. But for a senior in bracket 2 or 3 who experienced a qualifying life event, retirement, death of a spouse, stopped working, or had any other qualifying life change, the savings are real, recurring, and start as soon as the appeal is approved. Here is the summary. If you are on Medicare and your income was higher 2 years ago than it is today because you retired, lost a spouse, stopped working, or had any other qualifying life change, you are very likely paying an IRMAA surcharge on your Medicare premium that you no longer need to pay. The form that fixes it is called the SSA-44. It is one page, it is free, it is available at ssa.gov right now. Fill it out, attach your supporting documents, and submit it to your local Social Security office. Once approved, your Medicare premium drops, and that money comes back in your monthly Social Security check every single month going forward. The SSA will not send you a notice telling you to file this. They will not flag your account when your income drops. They will keep deducting the higher amount until you tell them to stop. Now you know how to stop it. If this helped you, please share it with someone you know who is on Medicare, especially anyone who recently retired or lost a spouse. They may be overpaying right now and have no idea. Subscribe if you haven't already, and I'll see you in the next one.